Good evening. Welcome everybody to the Journey to Become Wealthy. My name is Kelvin and today is Monday. We know we had another wild day in the market. Things continue to come down. However, we predicted that, right? We talked about it. We knew it was coming in anticipation. And you all know that Monday set the tone for the week. So before we get into it, make sure you like, subscribe to the channel, hit that notification bell so that you get notified when I make videos. So let's talk about it, right? Today is Monday. We saw the market come down, and it was actually slightly volatile in my opinion. I mean, things kind of they went up, went down, traded sideways a little bit, and it was kind of crazy, kind of hard to predict. However, the market started deep in the red, right? Started pretty deep in the red. So for me, that was already assuming that I can expect more downward pressure or something to go push back up to the top before it, essentially came back down to where it was. So that's pretty much what we expected. We talked about the market being down today. I do believe that there is potential for the market to continue going down. We are at right now at a point of a gap fill, right? If you all know what a gap fill is, it's where the market either opened extremely high or extremely low at one point, and it comes back to that point where it fills that gap. It continues down through the gap, right? Or it can continue up through a gap. So it just fills the gap in price. So we're in a position where we had a gap fill, and I'll be sure to show you all that. But just aside from that, I mean, the markets are down based on Jackson Hole Friday, Jerome Powell's Fed talk. So his speech, the aggressiveness of the Fed, more data coming, especially we got housing data coming tomorrow, I believe. And I actually have an article I'm going to show you all. But matter of fact, let's just take a look at the markets, and we'll get into all of those things, right? So we see right here the Dow was down 0.57% for today. S&P 500 down 0.67% today. Nasdaq down 1.02%. Russell down 0.89%, and the VIX up 2.54%. So those things right there. I mean, looking at the market, it's all down. The VIX, we know that's fear and greed. It's constantly going up after being up 17% on Friday, up another 2.5% on today. So that is definitely not good for us or the market, especially the amount of fear that's being injected to the markets. We saw a lot of small stocks come down heavy where they were rebounding, making great bounces. A month ago, 30 days ago, I showed you all back in July we had a 17% run up from the bottom, but now that those prices are coming back down pretty steep. So matter of fact, let's take a look at S&P 500. Let's see how far it's come down from that, right? So we know we had a 17% gain here from the low, 17%. From the high, we have now dropped 6%. So we are only up, that means what, 11% from the lows right now, and with potential to continue going down. So this is 9.92% up from the lows. We lost almost a full 7%. So, I mean, we have the potential to keep coming down. Let's hope that we do not beat out our previous low. This low was really just ridiculous. Let's hope we don't beat that one out and we eventually go back bullish. At least I want to say by the end of this year, right? I want us to see us bullish by the end of this year. Although we already know 2023 is already being predicted to be bad. It's already being predicted to be bad. Right now for the year to date, we're down 15.97% for the S&P 500. So we're almost back in that bear territory. For the Dow, we're down 12.26%. Let's check out the Nasdaq. 24%. I mean, we really still just taking a beating, you guys. So we still in a bear market officially. The Russell down 17.14%. Things just not looking good for us. Not at all, really. Not right now. So we got to kind of be aware of that. Here's an article that I found. Again, I thought it had some pretty good information because it tells us, hey, what's going on and why things have been trading at. But it tells us that stocks are trading higher in after hours as of right now. I can't say I don't expect it to hold, but you never know, right? I don't expect it to hold. I expect us to continue coming down, but seeing that we're at this gap, that's a point of support, right? That should be a position of support. So potentially we could be going up tomorrow if we hit a good support. But if we come through that, we can definitely expect more downward pressure. And again, I'm gonna show you all that later, so make sure you watch this video to the end. So stock futures rise slightly at second straight negative session. Stock futures ticked higher on Monday evening as Wall Street sought stability after another down day for stocks. The moves in futures followed a second straight decline for the major averages. We already talked about with all those loss. And here's, I think, a nice quote. Investors are coming to terms with the idea that the Fed is serious about curbing inflation, even as recent data suggests inflation is starting to decline, said Rob Von Lipsey, managing director at UBS Private Wealth Management. We believe the market summer rally, they called that the summer rally, that 30 days, we had a nice 17% run from those bottoms. We believe the market summer rally was ephemeral and continue to recommend that investors remain selective and focus on defensive stock sectors like healthcare, dividend-paying stocks, Von Lipsey added. So this is the part right here where I think it's really important. On Tuesday, tomorrow, investors will get several updates on the state of the economy, including the FHFA Home Price Index for June, the Conference Board, so that's again home prices, how's the housing market doing, the Conference Board's Consumer Confidence Survey for August, how is our spending going for the month of August, and the Bureau of Labor Statistics job openings released for July. Are we still producing jobs? Are we officially in a recession? Are jobs coming out the table? Where we were producing all of these jobs? Are companies starting to pull back now? So is the job numbers going to decrease? So all of this is coming out tomorrow. On top of that, another 2 weeks, we know we have another CPI report, and we have interest rate hike coming up just in the month of September, which is coming fast. So about 2 weeks, I want to say. So we got to be aware of all of those things. I mean, the market is reacting. It's reacting negatively, extremely negative, based on the Fed. That's really where we are right now. So we got to be very careful of that. So what I was talking about here, we got this gap, right? So this here is from June 9th. June 9th, we actually closed way lower here, right? We had this gap. This is the gap, this blue line, if you all can see it. So price was at 401.83, and it opened at 396.37 about. So it was opened there, but it actually closed lower. So the one thing is, we're at that same point now. Like I said, this could potentially be a point of support, right? Where it could bounce off of this and go back up, or it could potentially come down. So I'm going to show you all both scenarios, right? We got to get us a line, right? So we know from here, we came down, and I had already showed you guys this. We came up just a little bit, got some rejection. We're here on this line. We could potentially go up. As you see here, we could potentially go up, or we could potentially just come all the way through here, and we will stop, I want to say, at probably the 396 line, maybe 396, 397 just to be safe. We're going to say 397.40, and I'm going to change the color of that line. So 397.40. Oh snap, my line messed up. But yeah, I'm going to change the color of that so you can see it, right? And ignore it. I guess I got a little raggedy right here. How did I get all the way up there? But yeah, I'll have to fix that for us later. I'm going to delete that actually, and I'll redo it. So let's redo that line. As you all see now, watch the line so you learn with me, right? So we got it here. We came down, bounced back up just a little bit, continued lower. And right now we're sitting here. We could potentially come down through here, or we could bounce back up. So those are our options right now. Those are our current options. So we got to be aware of those. If we come down, put options, right, all the way down to about 397.18 is my opinion. 397.18. However, if we bounce back up, I would say we could top out. We'll probably stop at the top of about probably 405.15, 405.15 before we see a little rejection. So we got to be careful of that. I mean, we had that same rejection today actually, so I'm gonna give us a better number at about 407.37. So you guys be aware of this gap. Make sure you take your screenshot. Be aware of this gap, because we can either come down through it, or we can bounce off of this, and we can expect to hit this demand again, which now is supply. We can expect to hit this supply zone, and we could potentially reject. So these are the two zones where we need to be aware of in order for us to trade and be successful. So far, we made it all the way up here, which again, you all know I had all of this charted out in advance. So let's see how it moves back just over the next coming weeks, especially with the news that's coming out. I do potentially see this bad boy coming back down. I believe that we're going to be red for a little while. I see us come back down to this 397.18 before we start to see a little bit more green, but I could be wrong. as of right now, that's what I have for everybody. I thank you all for joining the Journey to Become Wealthy. Hopefully you enjoyed this video. Make sure you like, subscribe to the channel, and make sure you get those screenshots, rewind it a couple times. Make sure you watch the videos on how to chart patterns, because there's a lot of patterns in this screenshot, and I want you all, if you see it, feel free to email it to me, ask any questions, tag me, comment, whatever the case may be. But for now, thank you guys, and I'll see you all later.